Assalamualaikum warahmatullahi wabarakatuh. My name is Ferry and I'm from Group 8. I want to presentation about abstract PT Kimia Farma Tbk. So, PT Kimia Farma Tbk is a pioneer Indonesian pharmaceutical industry that has evolved into a fully integrated healthcare company with operations spanning the entire value chain. From research and development, pharmaceutical and raw material manufacturing product, distribution, and retail pharmacy services to clinics and diagnostic laboratories. Founded in 1817 during the Dutch East Indies area, Kimia Farma has undergone nationalization and transformation into a published listed company on the Indonesian Stock Exchange. As part of the state-owned pharmaceutical holding ecosystem, the company manages subsidiaries and affiliates that strike its presence across key segments such as raw materials, distribution, retail, and healthcare services. The company commit to quality is reflected in its certified manufacturing facilities that meet CPOB or CPOTB, ISO 9001, ISO 40001, and halal standards with an extensive operational network including factories, distribution center, pharmacies, and clinics across Indonesia, as well as export activities to Asia, Europe, Australia, Africa, and America. Kimia Farma play a strategic role in supporting national healthcare needs and strength Indonesia pharmaceutical independence. The company vision is to become the leading choices in integrated healthcare service with sustainable value creation. Its mission focus on managing business in the pharmaceutical, chemical distribution, and retail sector through the professional human research and strong corporate governance.
For the year 2022, this presentation will discuss 5 main categories of financial ratio. The first one is liquidity ratio, and the second one is capital structure ratio. The third one is asset management efficiency, and the fourth one is profitability ratio. All the data is taken from Kimia Farma financial management 2022 annual financial report. Okay, let's move to the first one, liquidity ratio. First, we have liquidity ratio, which means the company ability to meet short-term obligation. So the current ratio that I got, it's 1.06, meaning the company has 1.06 in current asset for every 1 rupiah of liabilities. So the second one is asset ratio atau quick ratio is 0.72, showing that if inventories are included, the company only cover 70% of its short-term debts. And the third one, average call-it period. So we got from average call-it period is 117 days, meaning it takes around 4 months to collect payments from customer. The account receivable, so we got account receivable turnover is 3.12 times, indicating slow collection. So the inventory turnover, we got 3.18 times, showing that the company sells and replace its inventory about 3 times a year, which is quite slow. So overall, Kimia Farma liquidity position is adequate but not strong. So the second is capital structure ratio. Next, we analyze capital structure, which measure how much the company depends on debt. So the debt ratio, we got 70.45%, meaning it's more than 70% of Kimia Farma asset are financed by debt they show high leverage. And the second is time interest earned. We got like 0.97. It means the company operating profit it's not enough to cover the interest expense. From this result, we can conclude that Kimia Farma is high financially risk due to heavy dependence on debt. So the third one is asset management efficiency ratio. Now we move to asset management efficiency ratio, which means how well the company used its asset to generate revenue. So we got the total asset turnover. It's 0.67, meaning every 1 rupiah of asset produce like 0.67 in sales. And we got fixed asset turnover or FATO. It's 1.29, showing that fixed assets are used quite efficiently. This means Kimia Farma used to fixed asset well, but overall asset utilization still needs improvement. The fourth one is probability ratio. Probability ratio shows well the company generate profit. So we got operating income return on investment or ROI is 2.46%, which means a low operating efficiency. And we got the operating profit margin or OPM is 3.66%, indicating small operating profit compared to sales. Next, net profit margin or NPM. So we got like 0.10%, which means the company almost broke even in 2022. So next we got return of equity or ROE is 0.23%. It's showing that shareholders receive very low returns. Overall profitability is weak and need a serious improvement. Yeah, because we can know that the liabilities is more higher than the profitability. And next, the profitability, we got gross profit margin or GPM is to 25.74%, which is that after paying the cost of goods sold, the company keeps about 26% as gross profit. Return on assets ROI is 0.07%, showing that Kimia Farma earns only 0.07 for every 100 rupiah of assets used. Both indicators confirm that the company profit per month is very low, and the conclude that I got in 2022 of Kimia Farma face weak profitability, high dependency, and moderate efficiency. The company should be focused on the first one is improving cost efficiency. The second one is reducing debt levels. And the third one is increasing operational performance to strengthen its financially conditions.
For the 2023 years, for the first is liquidity ratios, and first is current ratios. For the formula is current asset divided by current liabilities. For the result is 1.09. The company has 1.09 rupiah in current assets for every 1.00 rupiah in current liabilities. Kimia Farma can cover its short-term obligation, but the margin is safety is small. Liquidity is acceptable but could be improved. Next is asset test ratios. For the formula is current asset minus inventory divided by current liabilities. For the result is 0.64. After excluding inventory, the company has only 0.64 rupiah to cover its 1.00 rupiah of current liabilities. This show weak immediate liquidity. The company depends on inventory sales to meet obligation. Next is average collection period. For the formula is account receivable divided by daily total credit sales divided uh, 365. For the result is 340.36 day. Average collection period it take around 340 days to collect receivable. The collection period is very long, suggesting infen- inefficiency in collecting payment from customer. Next is average receivable turnover. For the formula is credit sale divided by account receivable. For the result is 1.07. Receivable turnover only about once per year. Kimia Farma receivable management is low. This may impact cash flow stability. Next is inventory turnover. For the formula is COGS divided by inventory. For the result is 0.42. Inventory turn less than once per year. Inventory movement is slow, which could lead to overstocking or outdated product. Next is capital structure ratios. For the first is debt ratios. For the formula is total liabilities divided by total asset. For the result is uh, 52.45%. More than half of the company assets are financed by debt. Kimia Farma relies moderately on external financing. The company has a fair balance between debt and equity, but higher debt could increase financial risk. Next is time interest earned. For the formula is operating income or EBIT divided by interest expense. For the result is 0.09. Operating income cover only 9% of interest expense. The company ability to pay interest ver- in very weak, indicating potential financial distress or high debt costs. Next is asset management efficiency ratios. For the first is total asset turnover or TATO. For the formula is sales divided by total asset. For the result is 0.11. Each rupiah of asset generates 0.11 rupiah. Sales asset utilization in inefficient. The company might not be maximizing its resources to generate revenue. Next is fixed asset turnover or FATO. For formula is sales divided by total asset. For the result is 0.23. Every 1 rupiah invested in fixed asset yield 0.23 rupiah in sales. The company fixed asset is underutilized, signaling possible over overinvestment or low productivity. For the fourth is portability ratios. First is operating return on investment or ROI. For the formula is operating income or EBIT divided by total asset. For the result is 0.0050 503 sorry 0.00531% of PT Kimia Farma. For the next is operating profit margin or OPM. For the formula is operating income or EBIT divided by sales. For the result is 0.47%. Only 0.47% of sales remain after covering operating expense. Operating efficiency is very low. High operating costs significantly reduce profit. Next is net profit margin or NPM. For the formula is net income divided by sales. For the result is 1.07%. The company earns 1.0 rupiah net profit for every 100 rupiah of sales. Portability is minimal. This indicates limit income after all expense. Next is return on equity or ROA. For the formula is net income divided by total common equity. For the result is 0.26%. For the interpretation is shareholders earn 0.26 rupiah for every 100 rupiah invested. The return to shareholders is very low, suggestion for overall profitability. Next is gross profit margin or GPM. For the formula is gross profit divided by revenue. For the result is 37.28%, where the company retains 37.28 rupiah as a gross profit for every 100 rupiah in sales. Gross profitability is healthy, showing good control over production and cost of goods sold. And the last is return of asset or ROA. For the formula is net income divided by total asset. For the result is 0.12%. Every 100 rupiah of asset produce only 0.12 rupiah in net income. Assets are not being used effectively to generate profit.
I'm going to explain the financial ratio analysis of PT Kimia Farma, TBK, and the code is KAEF in IDX. Okay, so the first one is the types of financial ratio is liquidity ratio. The first one is current ratio. So what is current ratio? Current ratio is a company's ability to pay current liabilities with their current assets. The bigger, the better. The formula for this is that current assets divided by current liabilities. And we found that the total current assets can cover 0.49 times of its current liabilities. However, since the ratio is below 1, This means that PT Kimia Pharma does not have sufficient liquid assets to cover its debt, suggesting a poor financial health in 2024. Next up is asset test ratio. Asset test ratio is a company's ability to pay its short-term liabilities with their most current assets. The bigger, the better. The formula for this is that current assets minus inventories divided by current liabilities. And the interpretation is that the current liabilities for Petrokimia Pharma can be covered 0.31 times by the most current assets. Since the asset test ratio for Petrokimia Pharma Tibika is under 1, meaning that they have a weak liquidity position and that the company have more short-term liabilities compared to their liquid assets. Next is average collection period. Average collection period is the average period required to collect receivables. The faster, the better. The formula for this is that accounts receivables divided by daily total credit sales divided by 365. And the reason why is that because there are 365 days within a year. We found out that the average collection period for Petrokimia Pharma is 42.8 days which is around 6 weeks. And this is considered fast because it is under 60 days or 2 months. So it is suggesting that Petrokimia Pharma is collecting its receivables in a relatively short period of time, allowing the company to pay its obligations. The next one is accounts receivables turnover, which is the company's ability to collect debt. The formula for this is that credit sales divided by account receivables. The interpretation that we found is that Petrokimia Pharma collects its accounts receivables and converts that credit to cash 8.53 times on average per year. And a ratio of 8.53 means that Petrokimia Pharma is efficient in collecting payments from its customers. Then the final one is inventory turnover. Inventory turnover describes the relative liquidity of inventory or how much inventory turns over. And the formula for this is that COGS or cost of goods sold divided by inventory. We found that Petrokimia Pharma recorded an inventory turnover ratio of 44.65 times in 2024. This means that the company sold and replenished its inventory approximately 4.65 times during the year. Or in other words, on average, it takes about 78 days for Petrokimia Pharma to sell through its inventory at once. The next type of financial ratio is capital structures ratio. The first one is debt ratio. Debt ratio measures how much of the company's assets are financed by debts, which means that the less, the better. The formula for this is that total liabilities divided by total assets. We found that Petrokimia Pharma is financing its assets using 77% of its debt. And since the company's debt ratio is 0.77 or 77 in percentage, it means that the company has more debts than their assets. Then last one is time interest earned or TI, which measures the company's ability to pay its interest expense. Petrokimia Pharma Tibika recorded a time interest earned ratio of 1.92 times in 2024. This means that the company's operating income is approximately 1.92 times greater than its annual interest obligations, or in other words, Kimia Pharma generates just under 2 times the earnings needed to cover its interest expense. The next type of financial ratio is asset management efficiency ratios. And the first one is total assets turnover or TATO, TATO, which measures how efficiently a company uses its assets to generate their sales. The bigger, the better. And the formula for this is sales divided by total assets. And we found that Petrokimia Pharma achieved a total assets turnover ratio of 0.66 times in 2024, meaning that every 1 rupiah of total assets was able to generate approximately 0.66 sales and revenue during the year. A total of 0.66 time indicates that the company's overall asset utilization efficiency is relatively low. In other words, Petrokimia Pharma is generating less than 1 rupiah of revenue for every revenue invested in assets. This means that in general, a higher tato above 1 suggests better asset efficiency, while a ratio below 1 implies that Petrokimia Pharma assets are not being fully leveraged to drive sales, so they need to improve its operational efficiency and asset utilization. And then the next one is fixed asset turnover, or FATO, FATO, which measures how efficiently fixed assets are used to generate sales. The bigger, the better. The formula for this is that sales divided by net fixed assets. The interpretation is that Petrokimia Pharma achieved a fixed assets turnover ratio of 0.81 times in 2024. This means that for every 1 rupiah invested in fixed assets, the company generated 0.81 in sales revenue during the year. A factor of 0.81 times suggests that Kimia Pharma's fixed assets such as manufacturing plants, machineries, and equipment are not being fully utilized to their full revenue generating potential. In conclusion, while Petrokimia Pharma fixed assets support significantly production capability, the sales generated per assets unit remain low, suggesting that there is room for improvement in operational efficiency and asset productivity. Then the next one is profitability ratios. Okay, the first one is operating return on investment, or OIROI, OIROI, which measures the effectiveness of management using assets to generate operating profit. The formula for this is operating income, or EBIT, divided by total assets. And the interpretation we get is that Petrokimia Pharma recorded an operating income return on investment of 0.58% in 2024. This means that for every 1 rupiah of total assets, the company generated only 0.0058 or 0.58% in operating profit before interest and taxes. 0.58% OIRO indicates that the company's ability to use its total assets to produce an operating income is very low, suggesting that most of the company's resources, such as plants, equipment, and working capital, which are not being utilized efficiently to generate strong operating returns. Then the next one is operating profit margin, OPM, which measures the percentage of profit earned after the company has paid all its production expenses. The bigger, the better. The formula for this is the operating income, or EBIT, divided by sales. The interpretation we get is that Petrokimia Pharma recorded an operating profit margin of 0.87% in 2024. This means that for every 1 rupiah of sales, the company earned only about 0.0087, which is less than 1 rupiah cent in operating profit after covering all production and operating expenses, but before interest and taxes. A 0.87% OPM indicates that the company's operating efficiency is very low, suggesting that the most of its revenue is being consumed by operating costs such as production, distribution, and administrative expenses. Next up is net profit margin, or NPM. NPM measures net profit per sale. The bigger, the better. And the formula for this is that net income divided by sales. So, Petrokimia Pharma recorded a net profit margin of 12.37% in 2024, which means that for every 1 rupiah of sales revenue, the company earned approximately 0.12 rupiah in net profit after accounting for all expenses, including operating costs, interest, and taxes. And then 12.37% of NPM indicates that the company is moderately profitable with a reasonable level of efficiency in converting sales into net income. This shows that Petrokimia Pharma's management has been able to control expense and maintain profitability despite of their competitive pressures and rising production costs. And then the next one is return on equity, or ROE, which measures how much return can be obtained by shareholders. The bigger, the better. And the formula for this is that net income divided by total common equity. The interpretation is that PT Kimia Farma Tbk achieved a return on equity or ROE of 35.86% in 2024, which means that for every one rupiah of shareholders' equity, the company generated approximately 0.36 rupiah in net profit during the year. 35.86 ROE indicates that the company is providing a strong return to its shareholders and is using its equity base efficiently to generate profits. This high level of return suggests that management is effectively utilizing owners' investments to drive profitability and growth. In general, a ROE above 15% is considered good for most industries, and in the pharmacy sector, typical ROE values range between 10% and 25%. Therefore, particular formulas of 35.86% result in significantly above average, reflecting excellent profitability and efficient capital management. The last two is gross profit margin, which is GPM, which measures gross profit per sale, and the bigger the better. The formula is gross profit divided by revenue. The interpretation for this is that a 29.64% GPM indicates that Kimia Pharma maintains a moderate level of production and pricing efficiency. The company is able to generate nearly 30% of its sales as gross profits, suggesting that its cost control over raw materials, labor, and manufacturing is reasonably effective. The last one is return on assets or ROA, which measures the company's ability to use its assets to generate net. And the formula for this is net income divided by total assets. And the interpretation that we can get is that Petrokimia Pharma achieved a return on assets of 8.22% in 2024. This means that for every 1 rupiah of total assets, the company generated approximately 0.082 or 8.22% in net profit during the year. A rule of 8.22% indicates that the company is moderately efficient in using its assets to produce earnings. This level of return suggests that Kimia Pharma's management is able to generate a fair amount of profit from its assets base, balancing between operational performance and investment efficiency. Okay, so this is for the financial overview of PT Kimia Pharma's financial ratio in 2024. In conclusion, based on the financial ratio analysis we have seen, it suggests that Petrochemical Pharma's TBK primary financial challenge in 2024 is short-term financial stability as evidenced by its poor liquidity ratio. However, the company appears to be managing its assets and capital structure relatively efficiently to generate profits, as reflected in its moderate gross profit margin and the interpretation of the debt to equity ratio. The overall financial health is therefore poor in the short term due to the lack of sufficient liquid assets to cover their current debt.
The next one is final summary. Overall financial condition 3-year outlook. PT Kimia Farma show a mixed but improving financial performance over a 3-year period. For 2022 until 2023, the company faced weak liquidity, low profitability, slow collection, and inefficient asset issue. Debt pressure was high and interest coverage was inefficient. And for 2024, Kimia Farma experienced a major financial turnaround, such profitability rise sharply, receivable and inventory efficiency show strong recovery, interest coverage improves sustainability. However, liquidity become critically low and the debt become extremely high, 77%. So the conclusion, PT Kimia Farma financial condition over 2022 until 2024 show significant improvement in profitability and operational efficiency, especially in 2024. But the company is increasing burden by debt and serve short-term liquidity problems. The 2024 performance indicates a strong recovery, but the high leverage and weak liquidity pose major risks that must be managed to maintain long-term financial stability. That's all from us. That's all from me. Thank you. Assalamualaikum warahmatullahi wabarakatuh.